So I'm gonna show you guys how you can capitalize off of FOMC instead of not trading on FOMC days or losing trades on FOMC days. How you can make money on FOMC days and use FOMC to in your favor. So let's get into this shit. If we're looking at NAS, we have been overbought for a couple weeks now. So what I did last night, because I knew FOMC came out today, what I did last night before I went to bed was I marked out the chart for the day. Marked up previous week highs, previous week lows, look, came down to the daily chart, marked up previous day lows, previous day highs. And then we came up, we're looking at the chart. Weekly is already bearish. We had this liquidity sweep up here on the previous week high. But weekly's bearish for this week starting out. Came down to the daily. Daily was in a retracement. So came out of the 4 hour. 4 hour was in a retracement. So our bias is bearish for this week. Or for today at least. We have the I can't move that for some reason. We have the weekly, that's bearish. Daily, bearish. 4 hour, bearish. So we shouldn't be looking for anything else but sells. You always want to trade with the trend. So this is when we come down to smaller time frames. Let me mark up market open real quick. Right here. Alright. So we know our bias is bullish or bearish for the day, I'm sorry. We come in, look at some bigger time frames. We have this area of resistance right here. We have this area of resistance right here. So we see once market came into open, coming out of the 1 minute, it made this big push to the downside. So it came up, grabbed this liquidity up here, grabbed that liquidity right here on this wick, and pushed down, made big legs to the downside, breaking this previous low and making a lower low, coming up, making another lower low. So then we wait for the macro. We don't trade anything because the market just opened. We wait for the macro. Macro is 950 to 1010. It's when price loves to grab liquidity. So we grab, this is a macro right here, 950, 1010. See how price came up, grabbed this liquidity up here on these higher time frames. If we come into the 1 hour, price came up here and grabbed this, came into this fair value gap, this bearish fair value gap, and grabbed this liquidity again, this one too. So we wait for price to grab liquidity, and then our bearish is still our bias is still bearish. So we're just looking for it to grab liquidity at a key area, which it just did, and we're waiting for more indication to the downside. So price starts selling off right here, comes all the way back down to right here, and it leaves these wicks. So it left liquidity down here, it left a bunch of orders right here, comes up into this imbalance, breaks below and does not close above it. Wicks come out of it trying to grab liquidity, can't, comes down below it. So we know that this is bearish for the day. So all you really have to do is just sit here and wait for FOMC. We had FOMC at what? 3 a.m. and 2 p.m. So the FOMC really didn't matter until 2. So FOMC happened at 2 a.m. And if you look at the 2 a.m., let me pull up sessions. If we look at 2 a.m., what did it do at 2 a.m.? Did I already pass it? No. What did it do at 2 a.m.? Came down, grabbed liquidity, and pushed up, and then sold right off. After FOMC, FOMC came out at 2. Shot up, grabbed liquidity from over here, came back down, made lower low, lower low, lower low, came up, grabbed more liquidity, and just completely dumped right on during London session. So all I did really today was this. Waited for it to grab liquidity, knew our bias was bearish, came up on the higher time frame, waited for it. I had this fair value gap marked up, so I was waiting for this liquidity to get swept anyway. And if we come down to the higher time frames, we have this wick that left this liquidity right here, this liquidity. It left that liquidity, and then if you go into the bigger time frames, we got, I didn't mean to put that there. We got all this liquidity sitting down here. All of this liquidity sitting down here. We're overbought. So you see all these fair value gaps on the bigger time frames. So all we really had to do was just wait for price to come back down into any of these key levels and try and grab this liquidity. And that's all I did today. Just had these levels marked up. Price came up into this 1 hour or 4 hour fair value gap. I think it was 1 hour. I caught a short. Had my stops a little above the fair value gap just to let it breathe. Had my take profits on, if you come down to the 5 minutes, had my take profits here, second take profit here. If you look at that trade, just by marking off the previous liquidity sweeps on the smaller time frames, perfect 2.2. I didn't catch the whole trade. I'd close my position right here on this just to keep it safe, but caught that trade. And price broke below this low and came down to grab this liquidity like I thought it was going to. So waited for another but it left this imbalance right here on the 1 minute. Waited for price to retrace into the imbalance. Caught this sell too. Had my stops a little above these wicks right here, just to let it breathe. Then had my take profits back down on these wicks because it made this low. Take profit hit, another 1 to 2 hit right there. Get rid of that. And we've seen price absolutely dump all the way down here. So I was like, okay, we're still bearish. It just absolutely dumped. Let's wait for another liquidity sweep. We have this fair value gap right here. We also have this bigger one on top, bigger time frames. We have this right here. If you scale into the bigger time frames. Look, it left this huge 15-minute fair value gap. Or not huge 15-minute fair value gap, my fault. But this is, you see this key level of resistance right here off of this wick. If you come down, that's what it was. My fault. It wasn't a 15. It was a 5. This 5-minute fair value right here. Price dumped, waited for it to come back up here. It left this too. Another bearish fair value gap. I waited for this one to get filled though, or at least I tried to catch a better entry. Came down. Price barely didn't get into it, but came up into this 1 minute. Fair value right here. I caught a sell right here off of this. Had my stops in the 50% of this fair value since it didn't go up into it. And I had my take profits at partials there. And then my real take profit down here on this wick. Had it right there. So have partials right here on this. If it would go there. This magnet, you're this fucking magnet. Partials right here. So all you're really doing the whole day with FOMC is once you see the initial move it makes, you see it. FOMC is at 2 a.m. You see after 2 it sold right. Grab liquidity, sold right into New York session open. Grabs liquidity, sold right off. It already tipped. The market already tipped its hand to you. It's telling you it wants to sell off, and that's why you did the bias. That's why we came down to here, and we did all this. So we already know what's going down. But now you just sat here and waited for it to tip your hand to you, and you watched it tip your hand to you. Right after market open. It shot right down, came into the macro, grabbed liquidity, made a lower low. This whole day you should have been selling. If you want to look, these are mine. First trade, right here. Take profit was off of this wick. Second trade, right here. I'm just showing you guys. This shit is all it is liquidity sweeps, fair value gaps. And if we really want to look, we had, where is it at? If we really want to look, we had, where's it at? Right here. We had an SMT divergence. I didn't take the picture of ES or SPY, but there was a bullish SMT divergence on NAS at ES. So we waited for this liquidity sweep. Then we waited for a key area to get filled, just like this right here. Right here, key area got filled. This fair value gap right here got tapped right into perfectly. Sold back down to these key levels right here. Another take profit right here. On the 50% of this bullish fair value. Hit right there. So all this is, all day long. You just keep going through. Just keep doing that. Rinse and repeat, rinse and repeat. Another one. See this big bearish fair value. See this wick right here? Grabbed all this liquidity into this bearish fair value grab. Made the doji. Shot down. Made a huge fair value gap right here. Waited for price to come down, tip its hand to us. It tips its hand right here on this wick and on this wick. Wait for it to come back up. Filled the fair value gap. We got in somewhere around here, like right in this wick somewhere. Sold it down to back down to some key levels we already had marked up from the previous price action. Another one taken right there. Another one right after that. He just caught this trade. Left this bearish fair value gap. Came back up, grabbed liquidity, stayed below this key level that we had our take profits set at previously. Now this area is a area of resistance. It sat here, waited for this fair value gap to get filled. That's all you were doing, is just catching the bias, which is bearish, waiting for liquidity sweeps off of fair value gaps. You enter, catch yourself. I had this yellow line marked out. This was a Hail Mary. I had to, not really though, because we already knew it was going to happen. I had this yellow line marked out because this was previous week lows. So if we go down, if we go right here, these were previous week lows. And that's exactly what that yellow line is. Right here, previous week lows. I was waiting for it to get tapped. Exactly what happened right off of this fair value gap. Previous week lows got blasted through. Liquidity sweep on this fair value gap and imbalance. Push back down. So all this is, all day long. So all this is. But yeah, you want to trade FOMC and try and Make your bread instead of not trading that day or just watching it or losing. Because people will think, people like, most of the time, yes, if it's high impact FOMC, which most of it is, sometimes it's not. Like, look, this was regular, this was medium. This didn't really matter at all at 2 p.m. So we should have been trading today. And just stick to your bias, stick to your strategy, and it's just going to play out no matter what. If it doesn't, and you stick to your strategy, and you're losing bread, maybe it just wasn't your day for the markets. That happens. You have losing days, you have losing weeks. It's gonna happen. But it's the whole key point of it is to have your biggest winner and your losers. You win more than you lose. But if you want to trade FOMC, that's all you really want to do. Just stick to your bias like any other day, and you can trade it. Just you can capitalize off of it. Like you can literally see it tipped its hands to you right off of market open. It's telling you, I want to go down for the rest of the day. So all you have to do is just wait for liquidity sweeps, wait for it to get back into a key level, catch your entry. Don't make your take profits huge. Don't be like, oh, okay, this is going to play out, which it did overall all day. If you had your previous week lows set and you were like, okay, let's just do that. If you held all day, yeah, it's about to get hit. But that's just not smart. What are you trying to have? Put your shit at where you think it's gonna be at off of previous price action, like this wick. There you go. Blast it right through. Easy 1 to 2, almost 1 to 3, right there. That's all this is. Every day. Just liquidity sweeps. Look for fair value gaps. Look for SMT divergence. Stick to your bias, and you will make money. You don't have to keep buying courses. You don't have to keep doing all this shit. It's not going to help you. Yes, the courses are going to help you if you don't know what you're doing and you're trying to learn. But everything you need is on YouTube already. But yeah, this is what you need. Not what you need. If this helped you at all, and you've been scared to trade FOMC days, or you don't trade FOMC days, or you've been losing money on FOMC days, it's literally like any other day. But just make sure you let the market tip its hand to you and you see where it's going for the rest of the day, and you're gonna be fine. But yeah, this is Take Profit Piz. We're gonna be back soon.